Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, August 14th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame here. One thing we'll notice is that right now price is right at the 50% expansion target from this key range. So we had this impulse sell-off, the breakout to the upside, and we've, for all intents and purposes, have reached that 33.85. We've gotten very, very close. The high is 82.5 so far. We hit 79 here, 82.5 here, 82 evens here, and so far today we're at 80.5 here. So you can see 3 days of highs all in that area. Now 4 days of highs building there. That's a very, very strong area of resistance, and if we break through it, it opens up some upside to the next upside target. Very similar to these 3-day highs here, and then it breaks higher and then it opens the door to more upside. Or when you have, say, 3-day highs right over here and you get that break and continuation, perhaps we're building that right now. One thing that I am watching here is the previous session's low. We only had a range of about 54% of average in the previous session, and now we are testing prices below that low and popping back above it. So that low, I believe, is 47s. The low yesterday here, it's 57.5. So 57.5 there, that's the level to watch. Right now we are above that level. We are trading 63.5. If price can continue to hold 57.5 early in the day, there is a shot to see a push back to the previous session's high and get a new high. That would be a short-term bullish outside day, and that could open up more upside. If price can get through 85s, it opens up some upside in the 3400 plus. So that's going to be the zone to watch. Again, as we know, this thing has been very bullish here, so any pullback, even as deep as 32.86.5, could still be a buying opportunity for a continuation higher. So even if we were to pull back on a one-day or multi-day basis into this zone, it could still be a buying opportunity for a continuation higher until proven otherwise. So right now we still have a very narrow range we're contending with as well. If you want to look at a 5-day basis, it's 65% of ADR. If we make this 6 days here and click OK, we'll see what we get there. We're at 57% of ADR. So on a 6-day range basis, we're narrow. Obviously today is not done, so that could change, but 1, 2, 3, 4, 5, 6 days, if we don't get through 82.5, 85s, then we could very well stay inside this range the entire week until next week, where we could see some expansion. So again, right now everything directionally speaking is still to the upside. We have a narrow 6-day range, which suggests major increase of volatility could be forthcoming. We'll see when that occurs. Okay, let's take a look now at the NQ. So here's a look at the NQ. Now, from the NQ's perspective, this one is also sitting right near the highs. That is very important here, but it's also inside of a trading range as well. So for the most part, it's not a range like the ES, but here's the trading for the month. And the mid portion of that range is about right here. And that's kind of where we've traded. You know, we've traded in the upper half of this range, and we were there yesterday and now today with an inside day. And before that, we were trading in the lower half of the range. And when we weren't doing that, we were right at the center of that range here. So that's pretty much the range we have going on right now. It's very clear that bulls continue to defend the Pima trigger zone. Every time it jumps into that zone, it pops back out. And that's been the case here. Again, the previous session did have a narrow range on average, but not as narrow as some of the others. But for the most part, if we were to dip down and see a failed new low, that could open up a nice continuation to the upside. Very similar to this day here, where we took out the low and ended up a bullish outside day. Same type of deal. If we take out some lows here and reject, it could open up a very nice continuation on a 1-day basis, or even outward on a 3 to 5-day basis. What we're looking for here is for a continuation toward the 11.7 target here after breaking through the top of this key range. So overall, if price can continue to hold, say, above 10.8, we can still hit 10.8 and still bounce. That could lead to a nice continuation toward that target down the road. All right, let's take a look now at crude oil. So right now crude oil has a range of 59% of average range, trading 86, or rather 80 ticks of range today so far. This one continues to be mostly range bound. Fading the edges is best at the moment. We do have an upward bias overall, but mainly a sideways range developing. We do have great 3-day highs, all very close to each other, all near the 43 level. And right now we are working on a failed low for the day. So a push below the previous session's low price of 42.09. Price dropped below it. Price dropped below the 8-period pivot-based EMA and is now back above both. And that is an early indication of strength there. So 42.09 is going to be very important. If price drops back into that level, bulls want to hold and keep that area bid for a potential return back toward 42.80 to 43. So again, if price can push through that resistance, it opens up some upside. We do have a new key range here that is developed with that impulse sell-off, impulse top, and then a pullback to the mid. That means that we have an upside potential here to easily get the next two upside targets on the next rotation. The next two upside targets would be 44.72 and 45.92. So those are the next upside targets. We're building energy right here in the upper half of this range, and once we get expansion, we could see a move that takes us right into those two targets. So those could be the targets ahead. If this thing fails to the downside and we fail to hold 41s, then the two equidistant targets to the downside would then be the downside target here into 38.72 with 39.92 as a mid target there. So that's the two downside targets into the key range low. So right now, a lot of energy being built up here with the potential to see a great continuation if we can get through 43s. Lastly, taking a look at gold futures, this one currently working on reaching that midpoint of the impulse sell-off. We talked about the impulse high, impulse low. Here's the impulse midpoint. That's 1981.70, and decently strong low that developed there Wednesday. And after that low, we mentioned that price just needs to hold 1920. If price can hold 1920, we have a shot to get to not only 1981.70, but perhaps a little higher, say into 2020 or 2030, where the breakdown occurred. And even then, this is an impulse sell-off here that's creating a new trading range up here for us to have two-way trade. This could easily not only bounce back to the mid and back to this zone, but it could come up here to new highs and then come right back down, and now we're trading inside this key range. So to get that 1981.70 is very important. To get it today, I think would be very important as well, heading into the weekend, to have a solidified key range. And so right now, everything suggests that that target will be hit. We have higher lows day over day so far, higher highs the last couple of days. Reaching that target will get us a higher high today. So right now, short term, can price hold 1950? If so, even 1940, right? We could drop as deep as that. We could still see a bounce. But intraday, if we can hold 1950, we have a shot to continue higher toward 1981.70 by the end of the session heading into the weekend. All right, that is it for now. We'll see how this plays out heading into today's session and into the weekend. Good luck. Trade well. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.